Okay, so you know how we're always digging into the wildest corners of the Forex market?
Always.
Well, this deep dive might just take the cake. You sent me some notes and diagrams, right? Trapo FX-style trading?
Yeah, that's the one.
It's like glimpsing into this whole secret world of market manipulation or something.
It kind of is in a way. See, most traders, they're busy chasing indicators, right?
Yeah.
Trying to outsmart everyone else. But Trapo FX style, it's about understanding the game the big players are running.
The big players. You mean like the Wall Street sharks?
Exactly. Institutional traders, they use these super sophisticated algos we call them, to make trades at lightning speed.
So it's like robots trading for them.
Not robots exactly. Think of it more like having a team of trading geniuses working 24/7, analyzing every tick of the market. But here's the kicker. These algos, they leave footprints, patterns.
Okay, hold on. So if we learn to read these footprints,
We start to see the market from the algos perspective. We anticipate their moves. That's what Trapo FX style is all about.
now that is seriously cool. But I gotta say, looking through these notes, FBRS, IDM low, expert entry models, there's a lot to unpack here. Where do we even begin?
And that's why the notes are structured the way they are. You don't jump into advanced calculus without, basic math first. Each level builds on the last.
Right, gotta learn to crawl before you can run.
Exactly. It's all about avoiding information overload, one step at a time, and suddenly you're seeing the matrix.
I like the sound of that. Speaking of seeing things differently, one diagram that really caught my eye was the retail trading one. All these arrows and lines. That's like a map of a battlefield or something.
Because in a way, it is. You've got different types of traders, different motives. You've got us, the retail traders, and then you've got the big guns, the algos, and they're all fighting over one thing, liquidity.
Liquidity, so like having enough cash on hand to make trades.
Basically, yeah. But it's more about the available buy and sell orders in the market. Algos trade huge volumes, right? So they need someone on the other end of the trade. That's where liquidity comes in.
Gotcha. So like if they want to sell $1 million worth of, let's say, euros,
They need someone ready to buy $1 million worth of euros at that exact moment.
otherwise they're stuck.
Or they cause a massive price swing, which isn't good for anyone, least of all them.
So these algos, they're always hunting for pockets of liquidity, and you are the prey.
Now you're getting it. And Trapo FX style suggests that these algos don't just wait for liquidity to appear, they actively create situations to draw it out.
Wait a second. So you're telling me these algos, they're setting traps for traders like us?
Let's just say they're very good at exploiting predictable patterns.
Yeah.
And who's more predictable than a retail trader hoping to make a quick buck?
Okay, now that is both impressive and slightly terrifying. So how do we avoid getting played? Is that where this whole algo structure thing comes in? I saw that term everywhere in your notes.
Bingo. Understanding algo structure is like getting a glimpse into their playbook. It helps you see how they create those price movements that suck in liquidity and allow them to execute their massive trades.
All right, you've got to break this down for me. I'm looking at this chart labeled algo structure. It's got all these labels. FBOSS, IDM low, TBOSS. It's like a foreign language.
Think of it like a play, a 3-act drama. Each label is a different stage in the algo cycle. And just like in a good play, the ending is rarely what you expect.
Okay, now I'm really hooked. So Act 1, FBOSS.
Yeah.
What's the opening scene?
All right, so FBOSS stands for false break of structure. Picture this. You're watching the charts, right? And
Yeah.
suddenly, boom, the price breaks out above a key resistance level.
Every trader's dream, right?
Exactly. We see that breakout and we think this is it, time to jump on board. But here's the thing.
The algos are way ahead of us.
They've seen this pattern a million times. They know how we react. So what do? They use that breakout, that FBOSS, to lure us in.
They're playing us like a fiddle.
They're playing the market. And we, my friend, are often the pawns in their game. That false breakout. It sucks in all those eager buyers, driving up the price, giving the algos the liquidity they need to offload their own positions.
So they're selling when we're buying. Brutal.
And it gets worse. Remember that IDM low we talked about?
The inducement low, right? Sounds ominous.
Because it is. After that false breakout, the price reverses, right? It starts heading back down towards that IDM low. And what do most traders do?
Panic.
Exactly. We see our trades going against us and we think, gotta cut my losses. So we sell right at the bottom, right where the algos want us.
It's like they know exactly where our stop-loss orders are.
Let's just say they have a pretty good idea. They trigger those stop-loss orders, buying from us at a discount, and then
The price reverses again.
bingo! The T-BES, the true break of structure. The price rockets upwards, but we're left standing on the sidelines wondering what just hit us.
Okay, I'm starting to see how this algo cycle works, and it's kind of terrifying. But knowledge is power, right? So if we know this is how they operate, how do we use it to our advantage? Your notes mentioned something about price behavior and delivery of price. Tell me more.
All right, so you spotted the initial F-boss, the false breakout. Now what? You watch how the price behaves as it drops towards that IDM low.
Price behavior. Okay, so what am I looking for here?
Speed and character. Does the price plummet like a stone, or does it kind of drift down there almost hesitantly?
So a sharp drop means...
The algos are hungry. They want to trigger those stop-loss orders fast. They're not messing around. But a slow, gradual decline might be a sign of weakness, less conviction behind the move.
Got it. So watch the speed of the drop. What about delivery of price? That sounds like a whole other level of analysis.
It is. Now you're looking at what happens after the price hits that IDM low. Does it bounce back up immediately like a rubber band snapping?
Yeah.
Or does it hang around down there for a bit, almost like it's teasing us?
Oh man, that's the worst. You think you found the bottom, you buy in, and then bam, it drops even further.
Another classic algo move. That hesitation at the IDM low is designed to suck in even more traders, create a bigger pool of liquidity for them to exploit.
This is like next level market psychology. So we've got F-bus, IDM low, price behavior, delivery of price. Anything else we need to be aware of?
One more thing, two-push manipulation.
Like that.
It's a bit more advanced, but trust me, it's a game changer.
Two-push manipulation. Hit me with it.
All right, so imagine the algos have set their trap. False breakout, price drops towards the IDM low. But instead of stopping there, they push it even lower.
Adding insult to injury.
Exactly. They trigger even more stop-loss orders, creating a sense of panic in the market. Everyone thinks this is it, the bottom's falling out.
And then what?
They pull the rug out again. Just when everyone's convinced the market's going to crash, they quickly pump the price back up to that original IDM low.
Wait, so that second drop, that was the real trap.
They're giving those stubborn bulls one last chance to get shaken out at a worse price.
Yeah.
And once they've mopped up all that extra liquidity, that's when the real move happens.
The true break of structure. Man, these algos are playing chess while we're playing checkers. But knowing this, it's like we can finally start playing their game, right?
Exactly. And one of the keys to winning.
Timing. Timing. You mean like when to enter and exit trades?
More like when these algo cycles are most likely to occur. And luckily for us, your notes actually include a pretty detailed schedule.
So this schedule, it's like a roadmap to where the action is.
Think of it like prime time for algo activity. You've got your London Open, your pre-New York session, the New York Open itself.
Times when the market's just buzzing, right?
Exactly. More traders, more volume, more opportunities for algos to slip in and out unnoticed.
So while we're sipping our coffee, they're setting their traps.
Something like that. But now you're wise to their game. You see a big move during those peak hours. You don't just jump in blindly. You ask yourself, is this for real? Or am I looking at another F-boss?
All right, got to think like an algo now. Which honestly is a total mind bender. But here's a thought. If this Trapo FX style, this whole way of decoding the market, if it works in Forex, couldn't it work anywhere?
Now you're asking the really big questions, and that's what's so exciting about this, because at its core, it's not just about Forex, it's about understanding how large institutions, these algorithmic traders, how they operate in any market.
So all this talk of FBOS and IDM lows, it's just the tip of the iceberg.
The principles are the same: supply and demand, exploiting patterns, manipulating emotions. You see it in stocks, futures, even crypto. Wherever you've got algos moving big money, you'll see echoes of this Trapo FX style.
That's kind of mind-blowing.
Yeah.
We really have been playing on easy mode this whole time, haven't we?
Let's just say the game just got a whole lot more interesting.
And a lot more complex. But hey, that's what we're here for, right? To dive into the deep end and figure out how to swim with the sharks.
Exactly. And who knows? With a little practice, a little patience, maybe we can even outsmart them once in a while.
Now that's a goal I can get behind. So to everyone listening, remember, knowledge is power. Keep learning, keep asking questions, and never stop exploring the markets.
Because the more you understand how the game is played, the better your chances of winning.
That's a wrap on another deep dive. Until next time, happy trading, everyone.